Hey, what's going on, guys? It's Travis here with JT Wealth. In today's video, I'm going to talk to you guys about two specific stocks that are both strong buys under $5 and have a dividend over 6%. Plus, they have some pretty impressive upside potential in the next 12 months. Pretty stoked about these two guys. Let's get into it. Alright, like I said, welcome back, guys. Thanks for checking out today's video. Hopefully you find some value in it, and if you do, don't forget, smash the like button and consider subscribing to the channel. Also, I know I didn't have my beer in the last couple of videos. Some of you guys commented about that, so I brought the tall boy for you guys today. Hopefully you can appreciate that, and let's get into today's video. Like I said in the intro, these stocks are below $5. They all have huge upside potential. That may or may not be because they have come down a little bit in price, but everybody's always talking about buying the dip, and then when the stocks dip, everybody wants nothing to do with them. Plus, they have 6.5% to 7.3% dividend yield each. Now, for a stock that's trading below $5, that's not a lot of money, but they are very affordable and can definitely help improve the position of your portfolio during these times of insane inflation. And here is the article we're talking about today. It's out of the TipRank site, and it's two strong buy dividend stocks under $5 with up to 7% yield and substantial upside. Everybody wants the stock that they pick to pay off, but sometimes that can be really tricky, and finding the right one for you is super important. Now, the two simplest courses of action an investor can take to ensure solid returns, they're based really on just common sense. The first, buy low, sell high. That's just finding a cheap stock with sound fundamentals and good prospects for growth, and then buy in to take advantage of that growth potential. And now the second common sense move is buy stocks that will pay you back. That is, buy into dividend stocks. And the very first stock on our list today is National CineMedia. National CineMedia, ticker symbol NCMI. This is the first one we're going to look at, and they have a really cool niche. It's one that most of us almost certainly never think about. They are the advertising business that creates, produces, and distributes ads that run before the movies you see in the theater. And the company benefits from having something of a captive audience. You're already sitting in that chair, ready for the movie to start. You're gonna take those ads in. Now, unsurprisingly, NCMI shares plummeted back in February of 2020 when the whole pandemic was forcing closures in the movie theater chains. And equally unsurprising, the stock has not regained its pre-pandemic levels just quite yet. And although reaching pre-pandemic levels is the goal, when you're 428% up year over year, you are still on a fantastic upward trajectory towards those pre-pandemic levels, and this is when you would want to get in. For the most recent quarter, the third, NCMI showed 31.7 million at the top line, which is short of pre-pandemic levels, which was normally around 100 million. And while it did miss the street's estimates by about 25%, it was still up a whopping 428% year over year. Also, it was the second quarter in a row of increasing revenues. And even after a year or more of this, pandemic-related headwinds, NCMI still has $64.4 million in cash assets available. And it's those assets that NCMI has been utilizing to continue paying its dividends throughout the pandemic and until today. Even though they did have to lower that dividend payment, they were able to maintain it for the last 2 years throughout this difficult time. The most recent dividend payment for them was 5 cents per share. Annualized out, that's 20 cents per share and a 7.3% dividend yield. Now, amongst their peers, the average is only 2%. So if you're investing in media platforms similar to this, you definitely want to take advantage of that fantastic dividend yield that is only going to increase when they get back to those pre-pandemic levels. Taking a look at analyst forecasts and price targets for National CineMedia, B. Riley Securities 5-star analyst Eric Wold he wrote, "We remain positive on the opportunity for the lights down strategy to differentiate NCMI's offering versus the emerging AVOD networks, given that NCMI's platform can offer a larger and more captive audience of key demographics. While we are modeling their advertising revenues through 2022 and 2023 to more or less mirror box office and attendance patterns, we would expect to see some positive separation in the coming quarters as NCMI benefits from stronger inventory utilization and higher CPMs. Based on those comments, Wold gives the stock a buy rating and a $6 price target, and that suggests it has 119% room to run this year. And Wall Street seems to share his view because it has 4 positive buy ratings and an average price target of 75.24% growth in the next 12 months. So that's our first stock that we're talking about today. We've got a $5 stock with a 7.3% dividend yield and possibly anywhere between 75 and 120% upside potential in the next 12 months. This is definitely one you might want to consider. Now, again, I'm not telling you guys what to buy. I never do that. I'm providing information and entertainment purposes only material so you can do your own due diligence and decide whether or not stocks like this fit your portfolio and your preferences. All right, but on to the second stock in today's video, and that one is loanDepot. loanDepot is an originate-to-sell lending platform focused on residential mortgage products with a multi-channel go-to-market strategy that uses both a direct branded presence as well as varied partnerships. They're relatively new to the public markets as it's only held its IPO in February of last year, and the company has been buffeted by problems since that IPO. First, the company operates in a highly competitive niche, non-bank retail mortgage lending, and then the second problem, loanDepot has been forced to face several lawsuits in the last few months involving allegations of business fraud and employee discrimination. All of this has put heavy headwinds in the way of the company. And now you might be thinking, that doesn't sound so good. Why do I want to get involved with a company like that? Well, I like putting out the negatives right up front so that we can address them and move past them. All of those headwinds have caused that stock price to be low. And when we want to buy low and sell high, this is the time to get involved. This company does have strengths, allowing it to meet these challenges. To start with, the company's most recent fiscal report showed the 9th quarter in a row of year-over-year market share growth, and it grew 46% from the last quarter. Furthermore, the company reported $923.8 million at the top line. And while this was down from $1.36 billion in the year-ago quarter, it was up a solid 18% from the quarter prior. EPS did even better, growing from 7 cents in the second quarter to 40 cents in the third quarter. And loanDepot reported having $506 million in cash at the end of the third quarter, a value that has grown steadily since the end of December 2020. Between the revenues and the earnings and the solid cash holding, this all combines to give the company confidence to keep up its dividend. Their most recent declaration was 8 cents per share. It's third in a row at that level, and with an annualized payment of 32 cents per common share, the company gives a dividend yield of 6.5%. So that's a strong dividend, but let's take a look at what the analysts are saying about the stock's growth in the future. Evan Barker, a 5-star analyst from Piper Sandler, has taken a bullish stance on the LDI stock, writing, "In our view, LDI appears better positioned to weather the current rate cycle, which should allow the company to remain reasonably profitable despite heavy competition. This should lead to downside protection via incremental book value growth, while an unexpected turn in the market, like rates moving lower, could lead to a significant jump higher in the stock." Now, Barker also takes this upbeat stance despite the pending lawsuits. He does not avoid that headwind, but he does not see it as a decisive move at this time. He wrote off the suit saying, "We cannot ignore these allegations and we do not know if they have merit. However, we believe the potential outcome of this lawsuit and a potential regulatory action would have limited impact." Taking a look at forecasts and price targets from the analysts, it gets an overweight or buy rating from Barker and an $8 price target, which implies an upside of 63% in the next 12 months. Wall Street appears to be in broad agreement with them as LDI shares have maintained strong buy rating from the analyst consensus. We've got 6 buys and 2 holds. That does have enough to keep it at the strong buy rating. And look at the average upside potential. It's even higher than Barker at 94.1% to an average analyst price target of $10.19 in the next 12 months. So there you have it, guys. We've got one stock trading in the $3 realm. We've got another trading just over $5. And both of these have massive upside potential while continuing to provide over 6 and in some cases 7% dividend yield growth potential. So what we're looking at is the trifecta here, right? We've got low prices, dividends coming in at a fairly high yield, as well as growth potential in the next 12 months that you could take advantage of. Now, none of this is to say that these stocks will actually realize the potential in the next 12 months. Sometimes analysts are wrong, and we have all seen that time and time again, but it is important to be on the lookout for these people who do it professionally and see what they're watching. Then you can decide for yourself with as much information as you can gather whether or not these stocks fit your risk tolerance, your portfolio preferences, and then apply your income appropriately. As always, thanks for checking out today's video. Hopefully you found some value in it. If these stocks excite you, let me know in the comment section down below. If there are other stocks in this same genre or in this same price target with high yields that you'd rather see videos on, let me know as well. Put a comment down there and I'll see what I can put together for you guys. As always, it's a pleasure, and until next time, bottoms up.